Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, giving you a Fibonacci trading course with 3 price action strategies that I'm going to reveal to you. It's probably going to be more than 3. It's going to be this webinar series will be a few videos because there's so much to cover, and I don't want to really leave anything off the playing field. So we're definitely going to get really in depth into this because there's a lot of misinformation out there, and just want to clear it up. I want to give you guys really a good method of using Fibonacci. I'm going to move on to one of my favorite sayings that I came up with, and what I like to say is that uncertainty is the beauty of the market. It's what provides us opportunity. Now, I say that because really, what the people in the know actually can take advantage of the people that aren't in the know. Okay, and price movements in the market aren't a straight line up and down. They're more like a roller coaster with all the thrills and chills that go with it. So advances and declines happen, but contra trend rallies and trend reversals are lurking always around the corner. And we're always asking how far or for how long can these movements go? Well, that's the $1 million question, and that's what we're going to try to answer in this video series. Now, the one thing we have to understand is that price advances and declines, right? They never continue uninterrupted. So like I was just saying, contra trend rallies and trend reversals occur all the time. Predicting these and the duration of them is the preoccupation of traders. That's what we're supposed to be doing. We're supposed to be basically looking for the next move of significance. And having proper Fibonacci levels will help us do this. Now, I'm going to introduce you to some concepts that really no one talks about because they're proprietary concepts. And I think that you're going to find them really interesting. So as we move on through the webinar series, you're going to find a lot of cool stuff that really you're not going to find out there except for here. So now, instead of really going into this whole series about Fibonacci and Leonardo, the Fibonacci, the guy that basically came up with this, and the Italian mathematician from the 1400s that produced a paper about the reproduction habits of rabbits, which is where it came from. I'm just basically going to briefly highlight the significance of the numbers. The numbers start with 1, 2, 3, 5, 8, 13, 21, 35, and so on. Now, essentially, these numbers are obtained by summing 2 consecutive numbers in a series to arrive at the next number. Now, what's interesting about this, as the numbers increase in size, the ratio obtained by dividing the preceding number by a succeeding number approaches 0.618, which is known as the golden mean. Now, here's a little controversy. And for me anyway, the controversy for me, like people will go like, well, the Great Pyramids and the dimension of your credit card, your teeth, Beethoven's Fifth Symphony, moth wings, the Madonna and Child, the Pantheon, the geometrical arrangement of the solar system, and the exact way that seeds propagate on a flower, they all have the golden section, the divine proportion, perhaps the most important single number in the universe, 0.618. Well, I don't know about that, but some people go on and on about this stuff like it's a religion. But I just think that that people. I mean, is there some significance to the numbers? Yeah, but all that I don't think so. I mean, I really think that what occurs in trading is that it becomes like a self-fulfilling prophecy. So many people use this. It becomes a self-fulfilling prophecy. However, there are certain characteristics that I can't dispute. You know, like when I start talking about later in the video, the Coffin Box, something that we developed at CRT Bank, there's something to it. I mean, okay, so is it just because people are creatures of habit and, you know, this has become so ingrained in the marketplace that it works? But I really don't care. I just know that it works. And if we can apply it correctly, we have a positive edge. And that's the most important thing in trading, is getting a positive edge. So I'm sorry I went off on a tangent, but the golden mean, the 0.618, remember, this was done by Leonardo Pisano, you know, a 13th century mathematician that basically came from his counting of rabbits, and he wrote a paper on it, you know, and in all honesty, I've read some articles that say that he basically pinched it from the Arabs, you know, but I don't know. I mean, like, we're not here to dispute that. I'm not here to disparage good old Leonardo da Pisa. But anyway, so as the numbers increase in size, the ratio obtained by dividing the preceding number by a succeeding number approaches 0.618, which is known as the golden mean. And conversely, the ratio obtained by dividing a succeeding number by a preceding number is 1.618. Now, this is a characteristic that is peculiar only to this specific time series. Now, if I say in this little slide, if you're interested, there's so many books on Fibonacci, and just go and get one if you want to really read about the golden mean and all that other stuff. It's out there. It's not really important for our topic today, but that's the background on it. Now, so this is some of my original notes that I took when I was trying to learn this stuff. And I was being taught by Steve, who was an old-time trader, and he was around a long time, and he was giving me pointers on this because I was really interested. At the time that I was learning this, I was trying to learn Elliott Wave. And Elliott Wave is riddled with Fibonacci as well. So Fibonacci is woven through Elliott Wave theory. Hint, hint, hint. So there's something to that. We're going to go over, eventually I'll go over like an Elliott Wave system that you could actually use Fibonacci with. But let's just stick to one section at a time. All right, so what we have here is we got a marketplace that is trending upward, okay? And then it reaches a top at 60. Then what occurs is we have natural decay. It's just profit taking. It is people that think they missed the move. It's going down. You got to think of the psychology. Think of your own psychology at times where you have to put the brakes on your brain to stop you from doing something silly. It's just fear of missing out. There's so much that actually propagates this idea, this movement. So we have a retracement back down, and we get right to a 0.618 retracement level. Now, a Coffin Box is 0.618, between 0.618 and 0.82, but that's for later. So when we have the upward movement trend here, okay, the trend is upward. This is known as decay. So get your pencils out because these are the important points, okay? Common decay retracements and expansion levels. In Fibonacci, 0.382 is, it's actually this section right here I'm looking at, just so you guys can see it. 0.382, 0.618, 0.82. Now, that is my number. It's the reason, okay, and let me explain to you where it came from. The traditional fib level is 0.786. But what I found out through time and through studying, I'm talking thousands of marketplaces, is that 76 really didn't hold up. 0.82 was better. Now it's a slight significant difference. It's not that big of a deal. However, psychologically for me, I am like if I draw a line on my chart, I expect that line to hold, and I am a literal person. And I had to basically come up with something that was a little bit better than what the 0.786 was. So I found 0.82 was better than 0.786. And I suggest that you take on your fib tool, you put in 0.82, replace it. All right. Replace the 0.786 with 0.82. Okay. And you're going to find you're going to have better results. And the idea behind this was, I call it skid. A marketplace skids. It does skid through 0.382. It does skid through 0.618. But the real important level was the 0.786 because it's almost 100%. But here's the thing. And the way I like to look at it is like, if we have a car that's driving 100 miles an hour and this trend upward, let's say it's flying, it's 100 miles an hour, and all of a sudden, bang, the car slams on the brakes. Well, it's going to start to retrace. It's going to start to skid. It could skid through 0.618. It could skid through 0.786, but that 0.82 is really important. It generally doesn't skid through that. It's a better support level. And that's all I'm saying. So what I'm trying to do is I'm trying to incorporate market skid. And the best analogy I could use is the car. Driving 100 miles an hour, you slam on the brakes. You're not stopping immediately. You're skidding. And markets do that. And they do it all the time. So it's a level that's better. So all that just to say, I believe it's better. I think you should put it in your fib tool, and I think that you should experiment with that. You're going to find out that it is better. And if you do, please leave a comment in the comment section that you did find it better or you didn't. I don't care, but leave a comment. And also, while I'm here, please, if you like what you're hearing and you like the channel, like and subscribe. Share the videos far and wide. Trying to build a big trading community, and also head on over to Park Avenue Trading. Get yourself a free ebook. It's like nothing you ever seen before. So here's your decay levels: 0.382, 0.618, 0.82, 100%, 1.382. Now, in between 100 and 1.382, you could use 1.236. If you've seen my other video on wave theory, on how to calculate the end of from a peak to a trough, how you could calculate, that was the word I was looking for in that video, trough. From a peak to trough, you could use a certain proportion that I use a level. I multiply by 2.236. So 0.236 is, for me, is an important level. You could even use that below the 0.382 on your fib tool. But you, in between 1 and 1.382, you could use 1.236, just a suggestion. Then you got 1.618. Then you got 1.82. There's my level again. Then you got 2.236, which I just mentioned, and 2.382, and so on. All right. So those are the expansion and decay retracements that I would suggest to use. So that's where I'm a little bit different already than all the other guys talking about this. I'm changing the level, and you're going to find that it's better. All right. Now, what's the other point I wanted to bring up? Maybe I'll find it on the next slide. But anyway, let's look at the next slide here. In this slide, I'm going to introduce you to the Coffin Box. And we're going to do a lot of charts with this, and we're going to show it, and we're going to prove it. Now, what the Coffin Box is basically saying is, we had this upward moving market from 30 to 65. Then the market starts to retrace, it starts to decay, and it comes down to the 0.618 level. All right. Now, I want you to take notice of something, like right here, this line that I have that's going from this to this. Because what I'm doing is, at this point, I'm going to the left, I'm measuring what's the lowest point, do I have a low? Yes. What's the highest point in between? This one. So I'm basically getting the fib retracement, the decay level, off of this leg of the move. And we're going to go over that in the future part of the video. Okay, we're gonna do that. Now, when this marketplace starts to expand itself again, it's going up into what I call the coffin box, which is between 0.82 and 618. Now, where did this come from? This came from this leg measure right here. So I measured from this top to this bottom, and I came up. I threw the prices up because this is this is where I say there are several types of measurements. You can't just measure one leg. There's a big overall Fibonacci scheme of things, a Fibonacci scale that is pertinent to daily charts, 4-hour charts, weekly charts, monthly charts. They're there, and they hold, and they're important because they're important levels because you start to get confluence of points. And that's another important part of this whole thing is confluence of points. I see a lot of guys out there going, well, we got this retracement here, and we're going to consider that, the support point. Of course it's support because it reacted off of it. But did you have on a higher time frame a level of support of a Fibonacci retrace, maybe 0.382 there? So let's say, for instance, this is a 4-hour chart, but on your daily chart, you had a confluence of a point that was lower. That's good. That's good to have. Now, like I said, we're going to go over that, but let's just stick with this. I'm already 17 minutes into this thing, and I don't want to bore you guys. So when we get this expansion level, if we would have came up into the coffin box, all right, and the marketplace failed and started to trend downward again, it has not trend reversed because we still have the 0.618, and then we got the 100%, or you got the 0.82, and then you got the 100%. A trend reversal would occur on a break of the 30 price low. This low. The trend reversal would occur on a break of that low. There's your trend reversal. Now, expansion occurs when the coffin box is broken. Expansion occurs when the coffin box is broken and the high is broken. There is your expansion. It's most likely going to 1.382. There could be a retrace back down to the old high, which it usually does. And then it expands up to 1.618. And there could be a retrace back down to, 1.236, 1.382, and then it breaks higher to the 1.82. So there's your expansion levels. I'm going to just show you the last chart on this PowerPoint where it's just shown on a chart. Okay, and we have the leg measurement from here, or from 2 to 1, and then we got the retracement based off of that right here, right there, and then here was the levels. Now obviously underneath 0.82 would be your coffin box, and the marketplace expanded up to 1.382. So I hope that you liked this part 1 of this series, and we're going to get into more. We're going to get into the charts itself. We're going to start combining these theories. And I'm also, even in this video series, going to go over Fibonacci time sequence. And I'll get into that, but really, I don't use it, but some people do use it, and I want to go over the proper way to do it. So anyway, if you like what you see, please hit the like button, subscribe. Don't forget to ring the bell. Head over to Park Avenue Trading. Get yourself a free ebook It's like nothing you've ever had before, and you're going to enjoy it because it's all price action based. I look forward to seeing you in the next video. Have a great one. Cheers. And remember, enjoy the party, but dance near the door. Cheers.